You are listening to Kickspot.
You know, we're back right here with our show Kickspot. Thanks again, guys, for tuning in. Again, you know, it's your host Migs and Jinu Park. With one of my beloved uncles, Uncle Kom, from Cambodia, born in Thailand, lives in Villa Park.
Wow.
Orange. Is it Orange or Villa Park?
It's orange.
It's orange. Orange.
You just want people to stalk him, I guess.
Yeah.
It's just, and his social security number is
Date of
and he
birth.
banks here.
Yeah.
So we appreciate you being on the show here. And before the break, we were talking about how the economy is pretty much going down the drain right now, but the wise investors are investing in the right things to win out during this time. And so
I'm one of those guys. You're one of those guys.
we try to be. And so I always like to talk about business and obviously I love it when my friends also succeed as well, you know, and we all succeed together. So hopefully you can give us some advice on maybe some stock tips or companies that you're currently looking at, or even just your strategy behind what you're doing. I know we were on a web cam show or whatever.
Zoom, you mean?
Zoom, yeah.
A webcam show.
Well, I mean,
we were not on that. All right. We were on a Zoom call.
let's just say they were drinking on that webcam show together.
Don't say webcam show.
Sounds a little.
They had a little
sketchy.
champagne
on
on the show, and they were, giving some quote unquote advice. But yeah, if you'd want to go over your strategy with the listeners, I found what you're saying very valuable. And also, like, from my perspective, I'm not much of a, when I look at stocks, I always think of like gambling, to be quite honest. And it's because, my grandpa back in the day made so much money off of Samsung. And then, I saw my dad as an investor and wasn't wise and he lost everything. So I got to see
both worlds.
I got to see the rich side of what could happen if you invest wisely versus, basically broke and living off of nothing, which our family did after a while.
So JP, let me just ask this question, Uncle Kom. If you had to give like on a basic 101 investing, what would you say your three most basic things that you need to do in order to gain the knowledge and to start good in investing?
Basically, for steps, you have to be willing to take some risk.
Okay.
First and foremost, without risk, there's no reward. Then you just stick it in the CD or savings, and today you'll earn
1%.
0.2%. Oh no,
not even that.
One would be very high.
Yeah.
And the problem there is you'll never keep up with inflation. Inflation, last I checked, is around 2%.
Yeah.
If you're not beating inflation, you're losing money.
Yeah.
When I have clients that come in and say, "Oh, I've got $500,000 sitting in my savings. I don't want to lose money. I don't want to take any risk," and it's earning 1%.
So you're losing money.
In reality, she's losing 1% a year because
Absolutely.
inflation's 2%. There's no secret that everything, the prices of all goods and services go up.
Absolutely.
They do not go down. There's a reason why milk was $1.25 a gallon, and all these stores
What is it
from
now?
1970.
$3 and something cents?
$4 or $5.
Yeah.
Why?
Crazy.
Because that's the way life goes. Things go up, they don't go down.
So you're saying the first thing is you want to be willing to take risk.
Some risk.
You
You don't have to gamble like Jinu said, and you go to a blackjack table and either you win or you lose. You can take calculated risks, and over time it will pay off.
Okay.
That's number one, I would say. Number two, having discipline, and just
I don't have that.
making sure to continue to invest and stick with it and not have emotion and sell out when it's dropping, because
I see a teardrop.
No, it's because perfect example. It's funny that you brought that up, Uncle Kom. I texted him a couple days ago because, I did my first options trade with him after he taught us how to do the options trade last week or a few weeks ago. And, that particular stock went to where I wanted it to be. It was like at 1248 at the peak last week. And then I was like, and then the following day went all the way down to like 10:32. And then I texted Uncle Cole. I was like, what the? I could have doubled my money at that point.
No, we weren't double yet.
Oh, it was almost
You're
double.
like,
I was
no,
like 80,
60,
70%.
something like that.
Even at $12?
Yeah.
Okay.
Because there's still time. So it could go down.
Oh,
Remember?
okay. See, I'm still learning,
Yeah,
right?
yeah.
But I was like, why, that stock is playing with my emotions today. And he was like, be patient, young one.
Yeah, so
So
let's save that because for all the rookies out there in investing option stocks, I mean these the terminology is pretty crazy because I think people are just used to just one type.
Yeah.
Right? Just
Yeah.
invest,
put your money in there,
and then take it out.
take it out.
Yeah.
Right.
Invest. Everything goes up, you take it out.
Yeah.
So invest. Everything goes down, and you
Sell
make
it.
money. You take it out too.
Yeah, absolutely. So
Yeah.
so you gave us two things that you would do. What is your third advice?
Another advice I'd say would be dollar cost averaging.
Explain.
What does that mean?
Yeah. What does that mean?
So let's just say you had $100,000. Oh, I'll use some recent.
Say $1,000.
Okay, sorry, $1,000, and you really want to invest the money. You know what to do with it, right? You're not too familiar with the market.
Yeah.
Maybe you're not too keen on risk, but you had to do something with it because if not, it'll sit and you'll lose 2% a year due to inflation.
I hate that.
So
2%.
yeah, so instead of investing all 1,000 at one time, instead of investing all one time, maybe you invest it over time. Instead of trying to time the market, it's about time in the market. So basically, let's just say you wanted to buy Apple stock, or you just wanted to invest and stick it in a mutual fund, right? You don't put all of it at one time. In that mutual fund, maybe you buy it 4 different times. Maybe you just do it once a month for the next 4 months. What that does is it spreads out your risk. So instead of you dumping it one time and basically hoping that the market goes up from there, which you'll probably be wrong because the market's always up and down. If you buy it 4 different times, you're gonna get 4 different prices. And maybe sometimes when it's down, you're buying more shares. When it's up, well, you're buying less shares. But over time, you get an average cost basis, and so you're not taking as much of a risk.
You're kind of looking at it like a roulette table and spreading out your numbers.
Sort of, yeah.
In a sense.
Yeah. Mm-hmm.
That's
Instead
smart.
of paying at one time, right. And that's the exact theory behind the 401ks and retirement plans. You just keep buying every single paycheck, right? Every
you
month,
put money
you
in
keep
there.
buying and buying
Yeah.
and buying. You don't care what the price is.
Yeah.
Because long term, where does the market go?
Gonna
It
go
always
up.
goes up.
Yeah.
You just look back in history and compare it to today. It's higher today. It might go down for a year or 2 or 6 months, but eventually it's gonna go back up. So as long as you understand that and you don't get emotional and sell out when it's low, then long term it's going to work out and you'll be successful.
Okay, so to recap, so the 3 things are, take some risk, right? Understand that you are taking some risk. Be disciplined, and don't let your emotions, run wild when stocks are down for a day. I got it. Okay, and then dollar cost average, right? Understand that concept right there.
Right.
That in the long run, your money's gonna pay out regardless because the market historically will always be up.
Right. Long term.
Long term,
Yep.
exactly. Yes.
So there are some cases where that hasn't happened. I unfortunately was an investor of Fannie Mae
Yeah.
Oh.
Yeah.
and lost quite a bit of money
Mhm.
during that time. And I think I was 18 or something like that.
Yeah.
So there are some
But you
times
know
where
the
that-
difference, right? I mean, Fannie Mae is one company. So anyone can lose money in one company. Trust me, I've owned companies that have completely gone bankrupt, but luckily I don't put a lot of money in them. But those are gambles, But when you buy a mutual fund where you own 100 stocks, 500 stocks, 1,000 positions of stocks and bonds, they're not all going to go bankrupt. They
And there's
may-
low risk
yeah,
ones as
right,
well.
right,
Yeah.
right. So as long as really another key that I really should have mentioned is diversification.
Yeah.
When we talk about investing in stocks and options, these are higher risk, higher level stuff that most people don't even touch or want to be associated with. Just having the mutual fund, you have instant diversification.
Yeah.
So your risk is fully spread
yeah.
out,
Yeah.
and you will never have a Fannie Mae situation.
Yeah. So when I first invested, obviously that happened, but then the second time I invested, I did do that. I diversified, and I remember my advisor asking me what kind of stocks I want. And I said, give me the safest stocks possible. And then he said, American stocks. So he was investing into like Coke and like all these, different companies. And so I took that as like, you know what, if I'm going to invest in companies, I'm going to think long term, and I'm going to think about the safest bets.
You and I are so different.
And so,
Very.
So when we talk about stocks, even recently, it's like,
I know.
here's the reason why I invested into this, and this is why. So I gave my example of Twilio.
Yo, man. Yeah.
And that was I think it was like 7-8 years ago when I invested, and that was around $50 when I invested. Currently it's sitting at around 190, almost 200. I think at one point like 212, but it took 7 years for that thing to go up. And like you were mentioning, everything does go up. But the only concept to me was, okay, it has to do with a communication platform. It's going to be on the cloud. Technology is going to take place. I understand that that's going to go up. It's not one of those Fannie Mae situations. So that's why I invested into that. But then I hear about what you guys are investing into and how you guys invest. And I'm like, man, you guys are so ballsy. Like
Well,
the way that you're doing things.
I like the hit it and quit it stocks, like I like the, if like right now, like I'm looking at a couple of stocks, right? Like cars.com, anything. We were talking about it earlier, right? This is the perfect timing. And then I also saw someone say, save your money. So, he made this like, it was just a simple meme. It said, save your money because when the market crashes, you want to put all that savings into stocks because the market's going to go back up again. Like, and it was he made it so simple that I understood the concept where, you want to buy stocks that are super low when the market is down. Like March, what was it? There was 2 days, March 13th and 23rd, I think. 23rd. Those 2 days was significant because within that week I bought stocks and it's paying off for me, and it's one of those things where I like the high risk, high reward, but also I have to live with the fact that if I lose that grand on my options trade, right? Like, hey, I have to live with that, because the payoff would have been two to three times in a very small amount of, time frame. Right, I have until when August something.
August or October.
Yeah, August or.
So as I'm listening from like an outside perspective, I didn't really understand that concept. So can you go over the differences between like the option?
Yeah. So an option is basically a right to buy or sell 100 shares of a stock or an investment. So it gets a little technical, but basically if you buy a call, which is an option to buy 100 shares, and your stock goes up within a certain period of time, you're going to get paid off handsomely.
And so I could only buy a minimum of 100 shares.
No, that is the minimum is 100 shares, or one option is 100 shares.
Okay.
You can buy 10 options, now it's 1,000 shares,
Okay.
So you're controlling more shares with less dollars.
So how much am I spending? So what? Give me a figure, just an easy figure to use. So
let's just use my example.
Right.
Right.
So let's say we put in $1,000 and bought 5 calls on a stock, and it expires in
August.
Let's say August or September. So if that stock goes up to $12, we would make money.
So how much did you buy it at?
So I bought it at 9 something, but I think the premium was what, $2 per call.
Well, the strike price was
$12.48 or something like that.
no 10.
Oh, the strike price was 10.
10.
Yes.
But we paid a
$2 premium. So I need that stock to be at above $12 in order for me to make money on that stock.
But you said it's 100.
Right. So I bought. So I gave them. I spent $1,000. Right.
Perfect. So just for the listeners
Yeah.
to understand.
So for the listener,
So it was $10, but then you have to buy 100
shares,
at
yes.
one point, which equals $1,000 at Migs spent.
Right.
Okay. So I just want the listeners to really understand that that's how the concept works. It's
Yeah.
not where as an investor, I'm spending $10 on a share, you can't. You have to buy 100 at one point. So that's why he spent 10 times 100, which is $1,000.
But here's the good. The good part is if this stock goes up to 20 before expiration in August, now you own what, 500 shares times 20? So you would have made a lot of money. Versus if you just put $1,000 into that stock, you would have made less because you'd only own 100 shares.
So it multiplies.
Right.
Yeah. Yeah. There's the multiplier.
within
It's
a certain
exponential.
time,
Yeah.
Right.
time span.
But the drawback is if the stock doesn't go up to the price you need to go up to and the option expires,
Then I lose
you've
all of that.
lost all of it.
All of it.
So,
yeah.
Versus a stock, you could just buy it, hold it, and just sit on it, right? There's no
Eventually
time.
it might go up.
Yeah.
There's no time. There's no deadline. You'll never lose it. You'll just always have your 100 shares.
So how long is the time?
So for me, I think it was August something. It's like mid-August or like last week of August.
You get to choose.
Yeah. So you can even go further than that, right?
But the
You can go as short as like a week,
Uh-huh.
as long as I've seen maybe 6 months out.
But Uncle,
7 months.
so the shorter you go, the higher the payout, right?
The shorter you go, the cheaper the contract.
The cheaper the
is,
the cheaper
because,
the contract is.
you have less time for
Yeah.
it to move the way you want it to go.
But is the exponential growth
Higher.
It's cheaper than it would.
I mean, it's the same.
Really,
It's gonna be
still
the
the
same.
same,
payout,
but
yeah.
less time.
Less
So
time.
then it's not quite the same.
But you're waiting for it to increase 5 times during that time.
No, it's any increase.
Any
I mean,
increase.
so Migs, for his example, he's got to hit 12 bucks a share. That means anything above that is all profit. At 12 bucks, he's break even.
Yeah, that's my break-even point.
Yeah.
So but my not break-even point is like if at the end of that expiration it was at like less than $9,
Less than 10.
less than $10, I lost all my money.
Well, even after it expires, you lose out. Is what you're saying.
No. If before it expires, the price is way above 12 bucks, you exercise or you just sell the option.
Yeah, you can
It's
sell it
just an
before.
investment, basically.
Yeah, but if
You
that
sell it.
expires,
Well, if it expires, then you would buy all 500 shares at that point.
At
You'd
that
have
point.
to come
Whatever
up with
that
your
price is,
money
yeah.
then to buy it, and of course you'd want to buy it at what, 10?
$10.
Because now it's 17. Well, who wouldn't want to buy a $10 stock that's now worth
It's
$17,
17,
but only pay $10?
Yeah.
Right? So
And
but
there's-
most people, you just sell the option.
Yeah.
You don't exercise it and take the 500 shares.
So what I learned from that, or what I learned from just this first one, is there's so much strategy that you can do on an options trade, and I want to learn more on it. But to put it in simple terms for the listeners is, once you get kind of gain some experience on stocks, right? If you really want to be creative, options is a way to do it. Because you can play both sides. You can buy a call where you're betting on a stock to go up, or you could buy a put where you're betting a stock to go down. Is that correct?
Yep.
You're right. And then it's the same thing. It's the same game. You buy those trades, and then you put a certain timeline where you could either sell it or you could let it expire, and you could see if your money went up or if your money went down, right?
so every single company has this option, or is it just specific
most
companies?
trade,
Most tradable ads.
decently traded. Like if penny stocks may not,
Got it.
because if there's not a market for it, people aren't buying it or selling it. Then, or maybe it's just too darn small. There's probably some kind of limitation on if they're too small. Maybe there's no options, market for them. But for the most of them, they do. Yeah.
So let's just say the stimulus package does pass. I have $1,000 that's coming my way. Give me your top 3 companies that you would invest in, and the reason why you would invest in those companies
Take notes on
for
this.
future. Yeah,
Oh
this,
boy.
I'm gonna put it on my watch.
this
list.
is like a Warren Buffett moment. Whatever you say right now, people are gonna
Just
go
sit
all
right
in,
here.
and we're all gonna make some good money.
Maybe I
Yeah.
should pull up my list and see.
the 5 people that are listening.
We're all going in.
We're all going
on
in this
these
stocks
stocks
right here.
So really, I don't know if I can really give you specific names. But
what industry would you put it on?
industry wise,
Yeah.
I'll put it this way. So one that I would actually look at investing today is oil in general.
Yes. He's been a big
There's
proponent.
many ways to invest in the oil industry, through companies, through ETFs, which is kind of like a mutual fund. that invest in oil through options.
Okay.
We talked about. But the bottom line is the future of oil, the price of oil can only go up from here, simply because as the economies open up, more and more people will start to drive their cars, which means the demand for gasoline will start to go up.
Now, is that a short-term investment then? Because with electric vehicles and then everything trying to go solar, is that?
I think it's limited in upside, but right now there's still good upside. But long term, I don't know how great it is, but based on the levels it's at today, due to the coronavirus, it's still a good investment.
Some of them are shenanigans. They'll do a split.
It's a little tricky, so you have to think about it. Oil is a commodity. You can't buy oil.
Yeah.
And then they send it to your home.
Yeah.
You know, so they buy options in oil for the future. And if oil demand goes up, then those option prices go up, and of course, hence your money will go up.
So what's your other two?
So that would be one. Banking industry, financials.
Really?
In general, yeah. Well, I'll take example Wells Fargo. About a week or so ago, the price is about $22. They were paying dividends of about 9%. So if you just sat on that stock, bought it, and a year later is still at $22, you still made 9%.
Don't they? Doesn't Wells Fargo pay out every quarter too?
Yeah. Every stock that pays dividends pays out.
Oh, quarterly, right?
Yeah,
right.
that's
Okay.
just normal standard procedure.
So every time you talk about an industry or stock, I'm always going to play devil's advocate. So cryptocurrency. Okay. So let's just say for those people, cryptomanias, would this also be a short-term investment?
For what? Into crypto or into?
Because let's just say, for
stocks?
example, crypto does take an effect, then to me that would affect a lot of the banking.
Mm-hmm.
Right. So would that be? So I guess what I'm saying is, if crypto works out,
Right.
then would that change your assessment on investments in banking long term?
No, simply because I don't think most people will adopt crypto. I think crypto has a place in the world, for good and for bad maybe. But crypto is also very hard to dump a lot of money into when there's nothing to back it. You know.
So let's just say it has a backing of gold.
Okay, that would help.
Okay.
Sure. But right now, if you invest in a bank, a stock, you own something that produces something that does something, right? In crypto, you buy it and you pray. It's a confidence game at this point.
Yeah.
But again, I think there's uses for it, and I think it'll still exist. But banking will always still be a need because people want to just go walk into a bank and do things, and not everyone loves change.
Yeah. And unfortunately, even if you love or hate the government, it is backed and insured by the Fed. So
Yeah.
So that's a safe bet.
Yeah.
And then your third industry.
Cruise lines.
Wow, that's
Cruise lines or airlines.
That's a ballsy statement.
Kind of, yeah, but okay.
Interesting.
Look.
He's up right now.
Like everything like cruise lines or
He's
like
up.
airlines. Or
Airlines,
just-
they're both kind of in the
Just
tourism,
wow.
industry. People eventually are going to have to go back to living, right?
Sure. This is a long-term stock.
Yeah, I'd say within a year.
That's short. That's short term. I consider a year
that's
short
not
term.
long, but
Yeah.
but I'd say within a year, airlines, cruise lines they won't be back up to where they were. Okay, so let's take for example
American Airlines.
American Airlines. It's trading at 10, 11 bucks,
yeah.
whatever. What's the high? Like 30 or 40?
Yeah.
So
33.
Like 30 something.
airlines and cruise lines are going to take a hit, and it's going to take them longer to recover. Maybe they don't recover back to 30 or 40 bucks. But if you're buying at 10 and it recovers back up to 20, that's not unreasonable. That's only half of where they used to be, but you're almost double your money.
Highest is almost 60 in 2018.
Okay, so never mind.
American Airlines?
Yes, 59.
So if they just go back halfway, which
I'm
is
okay
not-
with that.
Which is not, unreasonable.
Do it before
you're up
August.
Triple your money.
Do it before August.
Yeah.
All right.
Yeah. So, it's It's about timing at this point. It's not, you may love a company, but that company may not be a good investment.
So
Depends on where it's at.
So let's just say I invest into those 3 different industries, and then the market just completely crashes. It pops for some reason. You're saying, don't worry, hold on those stocks.
Right.
Eventually, you're
Right.
gonna win out.
Right.
Okay.
Yeah.
Well, that is what's happening,
Yeah.
right?
Sure.
Like we're seeing it firsthand.
Now they talk about a whole second wave with the virus. Maybe when economies open up, there could be a second wave, but we got to live. Eventually, right? We got to try. So hopefully that doesn't happen. If it does, these stocks have been so beat up, you might not drop that much. But at this point, there's a lot more room to go up
yeah.
than it will go down.
Yeah.
So the risk and reward, the value is definitely there, But you must be a gambler. Because if you're buying these individual stocks,
I like how he's
You're
looking
taking
at
a
he's
lot
looking
more
at me
risk.
and you and going like,
Yeah.
Well, I
Yeah.
mean, so me personally, it's nothing in those 3 industries. I've invested in Lumbongo, which is a company that has to do with diabetes, and it is a subscription based and is actually making money based off the subscriptions. And with telehealth now on the rise, and people don't necessarily want to go into the hospital, and you get your instant results off your off the diabetes check. That is the reason why my safe bet and gamble is on Livongo. So if you're listening, everybody invest, go in with me.
Levango. Sounds like a dance.
And there's nothing wrong with what you're talking about, but it's just a matter of what do you want out of that stock?
Yeah.
What kind of growth do you want? Like I said, the bank stocks are actually a very good value. They're not a gamble, not totally, because they're so cheap.
Yeah.
They're not going away. BofA, Citibank, Chase, Wells Fargo, they're always going to be here. They're too big, in my opinion, and their prices are too cheap. And like I said, dividends, whether the price goes up or not, you're still getting at least 9%
Yeah.
1 year. Okay, the other ones we mentioned, they're much higher risk, but much higher reward. So there's just depends on what floats your boat.
Yeah, my thoughts on the banking industry is with platforms like Venmo and Zelle and all those currency platforms that I would rather take my money out of the banks and then invest it into some type of long-term stock. Especially when we talk about inflation, you're not getting a return on investment now on savings.
Yep.
You get nothing from checkings. They're now charging a lot more money for stupid things. Like if you don't have a certain amount of money, they're charging. Like when I first got my own savings and checking account, they were just giving that away.
Yeah.
Sure.
But now it's like
You gotta keep a minimum.
Yeah, now there's a minimum. So you already know the direction where that's going. If they're charging you for the silliest things, and they have to try to make money.
Overdraft fees.
Well, to your point, low interest rate environments are not good for banks.
Yeah.
And that's where we're at.
Yeah.
So it's not good in that way. But when I'm talking about the stock, the price has been so beat up that I think there's good value.
Yeah.
But long term, like 5 years from now, no, I don't think it would be real. I would invest in something else
Yeah.
than banking. But at this point, it's a good,
Yeah.
a good, investment.
Yeah, no, I'm just saying I've seen more of an increase with my stock investments rather than banks. So if anybody's listening out there, just be educated
Yeah.
on
Do your
businesses.
research. Do your
the
research
old school
before.
system is not necessarily going to work. So think of a different strategy, diversify your portfolio. Don't take obviously these guys are risk takers, but don't go all in on just like one thing. Something's going to change if crypto's going to change. Like we have investments in crypto.
We do, yeah.
Hoping that's obviously going to take an effect. We've got investments in stocks. I've also have, savings, CDs. I
have CDs right there, 50
mutual
cent.
funds. I've got I've diversified my portfolio because I'm not going to go all in on just one thing. So really just educate yourselves on every platform possible.
Yeah, and to add on to what Jinu was saying, like not only educate yourself, but also that's doing research, but really find a mentor or someone that is in the
Absolutely.
financial world that knows, that's in the battlefield every day. Like you and I are lucky that I have this guy right here that's able to teach me. I'll call him, I'll text him, and he's more than happy to walk me through and help me understand certain concepts of stocks, and I mean, if it wasn't for him, I wouldn't be able to understand options trade. And I wouldn't be so interested in it, So also that's another tip for the listeners is try to find that person if you have that, to give you a different perspective along with your research, along with the education that that you're doing regarding a certain stock. So,
Yeah.
Education is key.
Yeah. So any other final message for the audience before we head out?
because I know you got to go.
Yeah, I do have to go.
The missus is calling.
Yeah, time is money, you know.
Yeah.
No, I just think you just got to believe in our country, believe in the people, because stocks are it's a fabric of our country, of our society. If all these companies were all gone out of business, where would we buy our food, our cars, our gas? They're all necessities. So when you invest in stocks, you're investing in yourselves.
In America.
Indirectly. In America. Yeah. In our society. So I just say stick with it, be disciplined, and we'll make money.
Yeah, I mean, we definitely appreciate your time, Uncle Combe. I know, that was kind of a lot. We talked about a few items
this
here.
is a long 15 minutes.
Yeah, I know. I said to him this interview was 30 minutes, but he didn't. I don't think he believed me. But no, but we appreciate your time. Thank you for doing this for us. We're probably gonna have you back for a second episode and talk about the documentary, The Donut King. Like I'm excited about that. Hopefully I can get the link so I can show him. I don't know if it's over. Okay, I'll try to get it. Oh, I know. I heard it's like only one day, right? That we got to see it.
200 viewers or something like that.
Oh, that was the max.
Yeah.
Okay, so hopefully, but that's for another time. But thank you for coming through.
My pleasure.
Yeah, thank you very much for being with us. For more information, please check out our Instagram. It's _Kickspot.
Yes.
And then we've also got a few different social media platforms, but we're gonna shoot all the links below on our Instagram, and feel free to listen to us next time. All right, have a great day.
See ya.
Thank you for listening to Kickspot.